Can you give us an idea of the depth of that? Look, I assume we could call it a liquidity pool since we're really talking about crypto.
Yep.
And can you give me an idea of roughly what it pays the liquidity providers?
I don't want to jump to like, it depends on the property, but it really does. I could pull it up right now. If you go to Lofty and then you go to staking at the top, you might see properties with like 6 figures worth of equity and liquidity, where if you own, say, 6 figures worth of tokens, technically sell to that liquidity, you will face price slippage by essentially like imbalancing that side of the liquidity pool. Some properties might have less liquidity, which means there's going to be more slippage. And so this would be the best example of it. Really does depend on the property. It depends on how many people are staking, whether people are staking their property tokens. And you could see on our website for every single property how much is staked, both for USDC and property tokens, and the APYs generated both over the last 7 days on average and 30 days. And so you could see for some instances, if you're staking property tokens, you could be earning like a 10% rental yield and another 5% from staking. So it's really just a unique way to compound your returns over just the income you'd receive from a traditional real estate investment.
So if I want to stake, I choose the property that I'm providing that liquidity for, or I choose the token that I'm going to invest in, basically.
Exactly. If you go to, it's just amm.lofty.ai, or just click staking at the top, you'll see all the properties. You can just click select next to any of the properties that you want to stake in. And then you can stake both USDC or property tokens. And before you decide to stake, you can see what those APYs are.
You had said that it did, depending on the property, the stakeholder might make a 5% premium over and above whatever rent if they're staking property tokens. For the sake of the audience, and maybe for us, where does that 5% come from?
It comes from that additional 2.5% fee that people pay when they do market orders.
I got you.
Someone places a buy market order for $10,000 and they're paying an additional $250 fee. That $250 goes directly to anyone that is providing that liquidity through staking. And you get that instantly. So that just comes directly to your wallet right when that order goes through. And then you could just withdraw that right away. And it's interesting to know if automated market makers obviously have been around for a while. Ours is a bit different. It's a proactive market maker, and really it's geared towards reducing volatility, because real estate is, let's say, a lot less volatile than some meme coin that really has no real utility. And so we have an interesting mechanism built in to where if you are essentially withdrawing liquidity and it imbalances the pool, there's actually a penalty that you'll pay. And that penalty fee goes towards everyone else that is continuing to provide that liquidity. And so our AMM is less about like yield farming and jumping from one property to another. That penalty is worked in because, again, these are less volatile assets. So the token price should not be changing as much as it does with like a traditional crypto investment. And so this is something we built from scratch. It's very unique. But again, the entire point of it is just to let people buy and sell instantly, like full stop. That's all people really need to know. But if you want to get under the hood, you can really dig into the more, I don't know, kind of like rabbit hole DeFi elements, if you will.
Quick last question I have for you next, because I'm gonna have to cut this off in the next 5 minutes or so, because I got to go play pickle with somebody. Pickleball, that is. Cameron and Joe know how serious I am about it.
Thank you for clarifying that.
Yes, I want to make sure the audience knew that. Pickleball. So if you did cost segregation analysis on a property to get that accelerated depreciation over the first 3 years, does that give that token extra value, obviously, from somebody buying that to get that extra discount with taxation? Or does that not pass through?
Inherently, it could. It wouldn't increase the value of the token, but someone might see that property had a cost segregation study done on it, which would allow, I guess, them to be willing to pay a premium for those tokens.
Okay.
Yeah. And this really goes for anything. The tokens start at 50. Most people will list their tokens initially at 50. There could be some element of your property that makes you think that the token should be worth more than 50. And if you think that's the case, list them for more than 50 and you'll very quickly see if the market agrees with you or if it doesn't.
Yeah.
You'll know right away. You could always cancel that order. You can relist them for less. Again, it's very flexible in that sense. But again, you'll very quickly know what the market thinks of the price you list your tokens at.
Awesome. That's everything I got. If you guys got more, we could set up another time with Max, I'm sure. And we could always think of stuff, write stuff down, and then maybe have a follow up with Max again here. If you're open to that, Max.
Good.
Awesome.
Very interesting, Max. Thank you. I appreciate it. I've got like Paul, I've got a large audience of investors that I can present this to. I think given all that you've shared today, I can do that with a pretty good degree of confidence.
Awesome. That'd be amazing. But like I shared with Paul, like happy to figure out some sort of a affiliate program for you. Of course, if you're going to be sharing this with both investors and sellers. So happy to jump, talk about that more async, jump on another call, whatever works for you guys. Cause again, we do appreciate always like new investors, sellers coming to the marketplace. So that means a lot.
Beautiful.
Very good.
Appreciate it, man. Appreciate everybody jumping on here as well.
Thanks for putting it together, Paul.
You got it.
Thanks, Paul.
Joe, see you later.
Take care.
All right. Have a good one.